Welcome everyone, and this is another update from ONE44 Analytics. We're going to go back and take a look at JP Morgan and Goldman Sachs and update the video we did on June 24th. Just as a little bit of a beginning to that, I'll take you through what we've done in the last few months here. We hit 38% back here at about 102 on JP Morgan and failed to make a new low. As we've said, always with 38% retracements, you should go make a new low or new high, depending on the direction you're going, to say that the trend is going to continue. Making no new low and or a slightly lower low and getting back into the range is also a sign that things are changing. You'll see it in reverse here on Goldman Sachs when we cover that. But it was this when we went down to 78.6% here. Failed to make that new low, and as always, whenever you've already reacted from 38.2, don't make that new low. We look for 61.8 back, and that's what we hit up here in the 116 area. Our target from 61.8, as stated in our rules is and guidelines, is that 61.8 should send you to 61.8 the other way, and that's where we kind of left it on the 24th when we were here, and our target for that was to go 61.8 the other way, which took us down into this 92 area. That completed that target here. Now again, just because this was 61.8, we just follow the exact same rule and guideline, and that is we should be, as our initial target, plan A, to go 61.8 back the other way. That would take us right up here. So 106 is now the current target coming up from 61.8 down here. Now, as always, we watch all of the retracements. Just because we're looking for 106 up here, we're not going to ignore 38 back. That's right here. This is where we're holding up against right now. And if this is all they can do, we would look for them to go back down to new lows as the 38% rule stipulates. Now, if that did indeed happen, we would then be looking at taking this back down here. Our target on a failure from this 101 area should take us down to like 85, 86. Longer term, as we said, our target is still 61.8 from the 61.8 up here. Now, as we also mentioned before and in the last video, and also what happens with the 61.8, when you start to hit these levels like this, you tend to get into wide sweeping ranges. That's the same from 61.8 as when you hit 78.6. It tends to put you into wide sweeping things with no real direction. As we said, hitting 23% and 23% and 38.2 should always send you on to keep the trend positive and new high or low, as we said, by the direction of the current trend. So now we're going to just take a look at Goldman Sachs here and get that in. Okay. So here we also showed from what happened on this way up here. We went to 38%, but as we were telling you before, we always want to watch the extreme. And when you go way back here, you can see that going back to that high, the 38% was right here, where the most direct move was right there. So you have to watch the difference of these two, know where they are. It could as easily have stopped here, but you need to know that nothing really changed until this went back to the all-time high. So we stayed around here for 6 weeks, actually got above it and then back under it, which should have been a negative sign. But as always, we watch all the retracements back down. And again, all they could do was go 38%. Never closed below it here, and right back up they go. Now again, what gave us this target up here of 61.8 is the fact that they had already reacted from 38%, and we held 38 the other way, which means the market is a lot stronger. When a shorter retracement in time and price outweighs a bigger one, you know something is getting very dynamic and strong. So in this case here, from down here, once this held, our target was 61.8. Now, when we did the video last week, or in June 24th, we were saying that the break from here, because this was 61.8, should have been down here at 165, 166 area. And once again, we always stipulate that any time that you move away from another retracement, you just don't forget about everything else. You have to start watching it back down. So from this thing, when it started coming off from this area, comes right into 38.2 and holds. This was right when JPM hit their target of 61.8, and this one was able to hold 38%. Again, 61.8 should have sent you that much, the 61 the other way, but what's happening here, and this is why you have to always keep an eye on it, is that this was only able to go 38%. Now here's where what followed on this rally is that this is the other thing you have to watch out for right here. We showed it to you on the other side where you failed to make the new low with JP Morgan, and then that coming down from 38.2 failed to make a new low, which tells you then to look for 61.8. Now the other side, and this is all in our rules and guidelines, is any time that you make a new high after holding 38%, as they did down here in the 190 area, make a slightly higher high or low, depending on which direction you're going, and then get right back under that. It's a negative sign. Now, having said that, we're looking for, because this still is the 61.8 area, we're still going to look for the long-term target to be down to 61.8 the other way. And we've already reacted from 38.2, so that's what still could be the long-term target. Now, again, as we said before, we did make the new high, and we're going to watch 23% back on this break. Even though we think it can get down way down here, we're going to watch and see how this acts in here. If this is all that this can do, it's extremely positive, as 23% keeps the market extremely strong, and 38 tells you the trend is changing. So as you saw here, we held 38 new highs, held 38 new highs, but we didn't slightly higher high, got right back down. That's not a good sign. So either they need to hold this 23% right here to stay the strongest, and if they can, then we will look for 78.6 back to the all-time high, and that's 244.5 area. And long term, if this thing really does come off from here, as we said, we're looking down here, 165 area, and again, they still would need to take out 190 to do damage to this current trend here. But as you can see, any market that really has some good strength is always going to hold the 38s underneath it, or if they're breaking, they're not going to get above 38. And again, extremely strong markets will only go 23.6% back. All of these rules and guidelines can be found at 144analytics.com, and please take a look at that. Please take a look at our intro video to Fibonacci, or our introduction to Fibonacci retracements. Take you through 40 years of the S&P, and where every low was right down into some major retracements on the way. So hopefully you'll take a look at that too. All of our charts here are provided by Bar Chart Trader. And until the next update, have a great week.